Hello there! Welcome to a new chapter of the Warren Buffett Note. Here, we daily talk about the Oracle of Omaha. Warren Buffett is an American long-term investor, philanthropist, business tycoon, and the chairman and CEO of Berkshire Hathaway. He is considered one of the most successful investors in the world and has a net worth over $100 billion. Warren Buffett's long-term investment strategy has proven to be successful through virtually all market conditions the past several decades: recession, high inflation, and deflation. If there's one thing that's made Buffett one of the most successful investors in history, it's his commitment to his strategy. And the questions of today: what was the mistakes that cost Buffett $2 billion? Yes, I can hear you thinking, $2 billion? That is crazy amount of money. If you had $2 billion, you could buy 666,667 cars at $30,000 each, or 10,000 houses at $200,000 each. And you heard it right. Warren Buffett is losing it with one stock, Occidental Petroleum. Warren Buffett's Berkshire Hathaway made a $2 billion misstep by selling its Occidental Petroleum stock in 2020, a market insider analysis of Securities and Exchange Commission's filing shows. The famed investor's conglomerate has spent about $10 billion to purchase 188 million Occidental shares this year, giving it a 20.2% stake on the oil and gas explorer and producer. However, it could have saved a fortune by hanging onto a previous holding of Occidental shares, instead of dumping it in 2020 and rebuilding it at a triple the price in recent months. Berkshire paid an estimated $810 million to buy 18.9 million common shares of Occidental in the second half of 2019, based on the energy company's average closing stock price in the period. Buffett's company received another 28.8 million shares in 2020, after Occidental opted to pay $400 million of preferred stock dividends to Berkshire in the form of common stock instead of cash. Occidental owed the dividends as part of a $10 billion financing deal it struck with Berkshire in 2019 and wanted to preserve its cash reserves. Berkshire sold its entire positions of nearly 48 million Occidental shares for about $720 million during the second and third quarters of 2020. If the conglomerate had retained those shares, they would have quadrupled in value of $3.1 billion as of Monday's close. Occidental's stock price has doubled this year alone to about $65, as Russia's invasion of Ukraine continues to disrupt global energy supplies and drive fuel prices higher. Berkshire's Occidental stock purchases this year mean it has effectively rebought the share it sold for about $2.5 billion, 3 times what it laid out in 2019. It has paid a weighted average price of $53 per share to build its stake this year, or more than triple Occidental's average closing price of $15 during the 2 quarters when Berkshire sold it in 2020. Of course, Buffett and his team couldn't have known oil prices would surge within 2 years of their Occidental exit, revitalizing the company's prospects. Still, they lost out on nearly $2 billion in profits by selling their Occidental stake in 2020 and ended up spending an extra $1.7 billion to rebuild it this year. I will end it with one of his most brilliant quotes. You don't need to be a rocket scientist. Investing is not a game where the guy with 160 IQ beats the guy with 130 IQ. That is, you can learn from Warren Buffett's mistake, but you can also definitely become a new Warren Buffett. Yes, this was it for today. We hope you enjoyed this video. Share this video with a friend if you found it useful. Consider subscribing to the channel for videos about investing, business, stock market, managing money, building wealth, passive income, and other finance-related content about Warren Buffett.